Coinbase gets reference price of $250 per share, which is pretty nuts when you really think about it. So NASDAQ gave Coinbase a reference price of $250 a share on Wednesday ahead of its planned direct listing, which would value the cryptocurrency exchange at about $65.3 billion on a fully diluted basis. Coinbase is set to become the first major crypto business to go public in the US, and should it reach a $100 billion market cap, will instantly be one of the country's 85 most valuable companies. So the company's value has soared in the past year alongside Bitcoin and Ethereum and the primary currencies traded on the site, which, by the way, you could go check out Coinbase down below in the description of this episode. And if you, I think, invest $100 worth of cryptocurrency, you can actually get $10 worth of Bitcoin in Coinbase. So this is a very crazy situation. Like, this is a crazy situation when you really think about it. So Coinbase chose the direct listing path to the public market rather than pursuing a traditional IPO. That means instead of raising cash by selling new shares to a group of institutional investors, Coinbase is allowing existing stakeholders to start selling immediately at a market-driven price. So the reference price provided by NASDAQ reflects recent private market trades and input from investment bankers, but does not indicate where the stock will open. This is NASDAQ's first major direct listing, and the 5 significant direct listings have taken place on the New York Stock Exchange: Spotify, Slack, Palantir, Asana, and Roblox, and the opening price was on average about 37% above the reference price. That is pretty big. That means this is like going to be like really close to around $300 a share, most likely, when it opens up. Which, here's the thing to really understand, right? Which is why I feel this is such a huge situation. One, because they are going the more direct route, right? Instead of going the traditional IPO, that means Coinbase itself could potentially raise a lot of money, right? Now, what I mean by that is because, look, for example, Coinbase is allowing existing stakeholders to start selling immediately at a market-driven price. That means, like, basically people who have Coinbase, like who are like stakeholders in Coinbase, they can sell their stocks at market price instead of selling it to, hedge funds and banks that like kind of get the like inside scoop and all that kind of stuff. Be like, oh yeah, I'll buy your stock at like $100, and then I'm gonna go sell it when it becomes public for like $200, basically making a profit, right? So this is the thing, like the traditional IPO route kind of screws over typically the original company, because they tend to sell a lot of their stock or some stock at a much lower price, right? Because it's these institutional investors that end up picking it up on a very cheap basis and then end up, doubling, tripling, quadrupling their money literally at market open. So instead of that, it's going to basically have Coinbase basically potentially make a lot of money right off the bat. And, that could help them basically fund a lot of things that they might want to do. Now, you also got to understand, too, there's been a lot of people that invested early on into Coinbase that, when they were first raising, money, because a lot of people didn't know what to think about Coinbase when it first started out, right? So all the people that ended up investing a lot of money and like putting their faith behind Coinbase, they really need a payday. They really want a payday because they've been, sticking with it for such a long time. Now, what's interesting compared to like basically almost any other company that either went the traditional route or the direct route, right, is that this is one of the few companies that have a crazy amount of I believe they have like a crazy amount of profit, to be more specific. Like they have been profitable and like a crazy amount profitable. So who knows just how much this is actually going to end up opening up at? Like who knows what the demand is going to be like? Because you got to think about it like this too. The demand on cryptocurrency, like, Bitcoin, Ethereum, I think Cardano's out there and all that kind of stuff. Like the demand on cryptocurrency is so massive right now that who knows? Like this could be something like so nuts where this might end up going to like $1,000 a share within the first week. You never know, right? Now, do I see that happening? No, I think that's pretty like a low chance, but it does have a chance to actually happen. What's most likely going to happen is that it's probably going to like increase pretty dramatically the first couple of days and then crash hard. There's going to be a whole bunch of people selling their stock, right off the bat. And then it's going to when it gets crashed super hard, right? I don't know how low it's going to go, but probably super, super low. And then it's going to get picked up again for like long-term investors, and people are going to hold it for a very long time, and it's probably going to raise to a very high amount. But either way, I think Coinbase basically wins no matter what. No matter what happens with this, Coinbase basically is the winner. So Coinbase said last week in announcing preliminary first quarter results that revenue in the period surged ninefold to $1.8 billion, and net income climbed to between $730 million and $800 million from $32 million a year earlier. That is insane. So the vast majority of transactions on Coinbase involve the purchasing of Bitcoin and Ethereum, which have been on a historic tear, climbing over 800% and 1,300% respectively in the past year. For the full year of 2020, revenue more than doubled to $1.28 billion, and the company swung from a loss in 2019 to a profit of $322.3 million. Coinbase has mapped out a plan to be at the center of an emerging crypto economy in which financial transactions and online marketplaces will largely move to the blockchain, giving investors a wide set of digital currencies to buy and trade, but the company has acknowledged that short-term growth will primarily be dictated by the price and transaction volume of Bitcoin. Feel free to become a member, support this kind of like news, financial commentary in the description. Check out 40inbox.com to master your money, personal finance lessons, personal finance courses. Contact us with your personal finance question or story, and we'll probably turn it into a future episode, because you could go check out 40inbox.com on YouTube or 40inbox stories on YouTube, and you could like pay attention to some like financial stories as well, and potentially learn something from that free resource. And yeah, Coinbase is going to be so crazy. And the thing is, depending on how Coinbase does, will depend on how many other cryptocurrency exchanges like Kraken, Gemini, all these other platforms, like how are they going to react, and how are they going to potentially go public? Because if they were to end up trying to go public, it's going to get nuts in the stock market for like the next year, right? Like it's going to be nuts this whole year, really. And again, Bitcoin, I believe at the time of this recording just basically today, I think it broke $62,000. So if my predictions kind of are correct, like I said, if Bitcoin ends up getting to like $100,000 by the end of this year, which it kind of seems like it's on track to do, there's a good chance that Bitcoin could probably reach the $1 million mark within like the next 5 to 10 years. Will it? I don't know, but Bitcoin is it's going to be super interesting to see what's going to happen with cryptocurrency within this year. I think this year is going to be super notable into the future of a lot of cryptocurrency. And Coinbase is going to be part of that history, part of that, that kind of like a line graph to see, okay, what's actually going to happen here? Like what's going to be the effect of the cause of Coinbase going public and how it goes public.